The interesting thing is I've always said the candles are the language of the market, but I was wrong because this is the true language of the market.
When you put all the pieces together, you basically get a very vivid and clear story the market's telling you. And how I view it is that like the market's a storyteller. When we can read the story it's telling us with more clues and more context, it's going to be easier to know what happens next, you could say, or what has a higher probability of occurring next. And that's where we look to take advantage of.
The interesting thing is I've always said the candles are the language of the market, but I was wrong because this is the true language of the market.
But digging deeper, it tells you really what's going on that you can't see from the candles.
Right. But at least when you're taking it and executing it, you have more information, which only means more confidence and at least more, as you say, context.
Every time we moved down, there was aggressive selling coming into the market, but the market wasn't moving down. If you see the selling, the market theoretically should move down. But it wasn't. So that tells me that somebody is buying from all this selling. And again, this is a bullish indication. When you add it to our level of interest, this is perfect confirmation for me. We pulled back into that area of low volume. We saw the passive buyer. We saw the absorption. We saw the trap sellers. Another big thing about like how I trade is tons of effort and no reward is a reversal signal. So if you see a lot of sellers putting effort in the market to bring it down and they're not getting rewarded, they got to get out of that trade. So what I did on this setup was I adjusted my stop loss 2 or 3 points under the low of the candle that I got in at, of where it formed, to give it breathing room just in case it breaks the low again and buyers need a little lower to keep absorbing. And then I took target profits at the high of day, didn't scale out, took all out of my profits above the high. And that was a good move because it kind of pulled back directly after that. So simple moves, impulse, and that's just putting yourself in the position of large buyers and large sellers. So it's just putting yourself in the position, $21,000 profit, 5.5 to 1 risk to reward. And why I love this strategy is because the risk is just insane. This enables me to have more meat on the bone. If I have more meat on the bone, I'm going to get more profits out of the market.
And it matters so much as well, in particular, because obviously if you do take a loss, those trades are going to make up for, they're the ones really that are going to make up so much of the P&L at the end of the month.
Out of the traders that I know, the guys on Wall Street that are not even on social media, they have maybe 5-10 trades out of the year that make up their year. And it's so important to have large wins and smaller losses. That's the key of longevity.